Good day, welcome to this class. If this is your first time on this channel, please click the red subscription button and click on the notification button so that when we drop more videos, you will get notified. So for the sake of this class, we'll be treating capital gain tax, but now we'll be treating rollover relief. We've made some videos on capital gain tax. If you have not watched those videos, ensure you check them on this channel before you proceed here. Now the question is, what do you mean by rollover relief? Rollover relief is a relief that is granted to taxpayers whenever they are selling off their old assets to buy a new asset of the same class. Now this is what I mean. If I'm selling this asset now, let's say this is an asset, so I'm selling it for 10,000 naira. Probably it's my own, but I decided to sell it. There are a lot of reasons why I might decide to sell it. Maybe this is not working very well, maybe it's giving me issues, or probably I just need a new one. I decided to sell it and I decided to buy another one. So you are selling a marker and you are buying another marker. In that situation, you can claim your rollover relief. So rollover relief is claimable when you are selling off your old asset to buy a new asset of the same class. And you need to know something, that before you can claim a rollover relief on capital gain tax, you must generate a capital gain from selling off the assets. Yes, that means that if you are selling your old asset 30 million, you must have bought it at an amount or at a price lesser than 30 million so that you generate a capital gain. Then you can now claim a capital gain rollover relief. Let me give you guys the format so you will see how we estimate or how we calculate it. The format, let's go. So as you know, when dealing with capital gain tax, the first thing we need to get is the sales proceed. So the sales proceed. So after that, we less selling expenses, advertisements, and all of that, advertisement fee, agent fee, and all of that. So let me just say it less selling expenses. Let me just put it, but I believe you all understand what I mean by selling expenses. So if I less that, I'm going to get a new amount. This amount I'm going to get is the net sales proceed. So if you have not watched my previous video, I've explained everything in my previous video. So this amount I get now is my sales proceed. So the next thing I'm going to do is to less my cost of acquisition. So cost of acquisition. Then if I less my cost of acquisition, I'm going to get my capital gain. I'm going to get my capital gain. Now, after this, when you get to this point, if you have been told in the question that this particular individual is selling off the old asset to get a new asset of the same class, then you now calculate rollover relief. You go this way, rollover relief. So the rollover relief, you go with lower of. I'm going to explain, just follow me as I write the format. Then when I write the format, I'll give explanation on it. Lower of the sales proceed, and amount reinvested. So the lower of these two, sales proceed and amount reinvested, the anyone that is lower, then you now subtract, you less your cost of acquisition. This cost of acquisition here, you less it again here, cost of acquisition from anyone that is lower. If it is sales proceed that is lower, you subtract your cost of acquisition from your sales proceed, and if it is amount reinvested that is lower, you less your cost of acquisition from your amount reinvested. So when you less it, you have the balance here. Then you subtract this from your capital gain, so you get chargeable gain. So it's from this chargeable gain you now calculate your CGT, capital gain tax, at 10%. Now I want to believe if you have followed my class from the beginning, you will have understand everything from this sales proceed to this capital gain point. So the point where you will be having issue with anything is from this rollover relief. Now, let me explain the concept of rollover relief again. When we say rollover relief, this is what we are trying to do. I'll give a good illustration so you get it. Let's say, for example, I bought an asset in a particular year, maybe 2015, at a cost of 10,000 naira. So I bought this asset 10,000 naira, but for some reasons, I want to sell the asset and get a new one of that same asset. So I sold the asset after 5 years. I'm selling it 15,000 naira. So I bought the asset 10,000 naira years back. I'm selling it 15,000 naira this year, and I decided to buy another asset. So let's say I'm buying the new asset 25,000 naira. So I bought it 10,000 naira. I'm selling it 15,000 naira after some years, and I bought a new asset at 25,000 naira. Now, if you look at this very well, what is the what has happened? This is the amount I bought it years back. Let's say 2012. Then in this particular year, let's say 2015, for this particular year, this is the amount I sold it. I'm selling it. So I bought this asset 2012, 10,000 naira, and I bought this. I'm buying it again after 5 years or so many years at 25,000. That's more than 2 times. So there are a lot of reasons, or there are a lot of things that can cause this asset to have multiplied, the cost of this asset to have multiplied by 2. And part of it, which I'm going to really consider in this video, is inflation. Yeah, inflation can make the prices of things go up. Yeah, we have countries that experience inflation. So when we say capital rollover relief is when the concept or the idea behind rollover relief is just that by what amount as the cost of this asset increase. Yes, you agree with me that it has increased by 15,000 naira. So the relief we are going to give you is this 15,000 naira, the amount by which the asset has increased from that year you bought it to this current year. So that is the idea behind rollover relief. We just want to calculate the amount at which the asset has increased, and we'll give you relief on it. That is just it. So for me to be able to calculate that, I need to get the current market value, because this 25,000 naira is the current market value. This 10,000 naira is the old market value. That's the cost of acquisition. And of course, in your question, you'll be given the cost of acquisition. But what you need to get is this current market value. And the question you need to ask is that there are two things that will tell you, that will give you hints about the current market value of an asset. The first one is the sales proceed. Yeah. After so many years, I'm selling an asset. See, sales proceed. So I'm selling off this asset. I bought it 10,000 naira, but in 2015, I'm selling it 15,000 naira. So that means that the current market value is around 15,000 naira, and you get what I'm trying to say. So sales proceed will give you a hint about the current market value. That is why here we have sales proceed, because we need the current market value. Another thing that will give you the hint of the current or the market value of the new asset is the amount reinvested that I have here. So what do you mean by amount reinvested? Amount reinvested is the amount you bought the new asset. You are buying the new asset rather. I'm buying the new asset 25,000 naira. So this 25,000 naira is also telling me that the current market value of this asset is 25,000 naira. Probably because this one is old one. That is why I'm selling it 15,000 naira. But now if you want to buy the new one, it's 25,000 naira. So those two things that tell me about the current market value of this asset can only be the sales proceed or the amount reinvested. So I'll just take any one that is lower, because I told you that what I want to calculate is the by how much the asset has increased over the years. So I'll just take the lower and subtract it from the cost of acquisition. So I want to get the amount at which the asset has increased over the time. So I want to give you the relief of the increase that has happened within those times. So I less my cost of acquisition from the lower of this. I get by what amount my asset has increased. Then I subtract it. I get my chargeable gain, and on my chargeable gain, I compute my capital gain tax. So that's the ideology. Let's take a question together and solve, and let's see how we can tackle something like that in real life. So let's go. We have Mr. Wisdom Ican acquired an industrial building in Ota, Ogun State, Nigeria for 150 million in June 2015. He carried out improvement works on the building which cost him 70 million. He sold the building in September 2018 through an estate agent for 500 million. The agent is entitled to a commission of 10% on the sales value. In December 2018, he purchased another industrial building for the same line of business at Agbara, Lagos, using 350 million out of the proceeds from the sale of the former building. He paid a lawyer's commission of 35 million naira for the acquisition of the new building. So we are required: A, calculate the capital gain tax payable by Mr. Wisdom Ican for the relevant years of assessment. So from this question, you've seen it. If you don't get the question, please pause it or you take it back and read it very well. So we want to calculate Mr. Wisdom capital gain tax with including rollover relief. So let's go. As we all know, the first thing we do is, permit me to clean this. The first thing we do is to say we are preparing for Mr. Wisdom Ican. So Wisdom Ican. So what are we preparing? We are preparing capital gain tax for which year of assessment? In what year? I've said it in my previous videos that capital gain tax is computed based on current year basis. So in what year is he selling the asset? In December 2018, he purchased, or the agent is entitled to, yeah, he sold the building in September 2018, so he's selling it in September 2018. So capital gain tax for 2018 year of assessment. So capital gain tax for 2018 year of assessment. So the first thing we need to get is the sales proceeds. So how much is this Mr. Wisdom Ican selling the building? From the question, he said he sold the building in September 2018 through an estate agent for 500 million naira. So sales proceed 500 million. So that is the amount at which he's selling the asset, 500 million. Okay. When he sold the asset, is there any expenses that that he incurred while selling the asset? Yes, and we have it. We're going to say the agent is entitled to a commission of 10% of the sales value. So agent commission, less agent commission, which is 10% of the sales value, and the sales value is 500 million. So 10% of 500 million, that should be 50 million. And if you subtract it, you get 450 million as our net sales value. So we can have our net sales value as 450 million naira. So let's proceed. The next thing we need to do now is to subtract the cost of acquisition and every other cost related to buying the asset. So from the beginning of the question, Mr. Wisdom Ican acquired an industrial building in Ota, Ogun State, Nigeria for 150 million in June 2015. He carried out improvement works on the building which cost him 70 million. So 150 million, the amount he bought the asset, and improvement costs. I've said it in my previous video that any amount you spent on an asset to improve the assets is part of the cost. So less cost of acquisition, cost of acquisition is 150 million. Yeah, 150 million, and improvement fee, which is how much? 70 million. So if you add improvement fee and cost of acquisition, you get 220 million. So 220 million from 450, by my calculator here, I'm going to be having 230 million as my net sales proceed. So Here I'm going to be having 230 million as my net sales, sorry, as my capital gain, rather, as my capital gain. So my capital gain is 230 million. So let's go calculating rollover relief. So let's go. We have rollover relief, rollover relief, which will be lower of the sales proceed or the amount reinvested. Now, if you say lower of the sales proceed, we are talking about lower of the sales proceed, right? Now, in this situation, should we use the sales proceed, which is 500 million, or the net sales proceed, which is 450 million? Now, sales proceed is just an amount you earn from selling off an asset. Yes, so if this man is selling the assets 500 million and is paying agent commission of 50 million, the amount he earned from selling the assets is not actually 500 million, is 450 million. That is the net sales proceed. So in a situation where you have net sales proceed, please, and sales proceed, use the net sales proceed, because it's the net sales proceed that is showing the true value or the true amount realized from the assets. It's not 500 million. So we come here. So net sales proceed, net sales proceed, which is 450 million, 450 million, and the amount reinvested, amount reinvested. So from the question, how much did the man reinvest in buying the new assets? From the question, it says in December 2018, he purchased another industrial building for the same line of business at Agbara, Lagos, using 350 million. Now, 350 million is the amount he spent in buying the new asset, but that is not enough. If I should use this 350 million, that is why you need to always ask yourself, you need to be precise. You don't need to be so fixated on formats. They said he bought the assets using 350 million out of the proceeds from the sale of the former building. He paid a lawyer's commission 35 million. Now this man is buying this asset 350 million and is paying a commission 35 million. So if I should ask you, what is the cost of buying the asset? The cost of buying the asset is not 350 million alone, but it's 350 million plus the 35 million naira is spent. I spent for this tab I'm using for this class, I spent 10,000 naira in getting it, but I paid 2,000 naira for transport. Are you going to tell me if I want to sell this, I'll sell it at an amount less than 12,000 naira? No, I cannot sell it because I'm going to make a loss on my transports. So if I'm going to be, the real amount reinvested should be the amount is spent in buying it plus every other cost associated with the amount is spent. So it will not be 350 million, rather it will be 350 million plus the 35 million naira he gave his lawyer. Is he his lawyer? Yes. So 350 million plus 35 million naira, that will give us 385 million. So on this board here, I'm not going to have 350 million, I'm going to be having 385 million. And so the current market value of this asset is 450,000 and 385 million. So don't forget that we pick the lesser of the two, and the lesser we'll be using is 385 million. So what are we going to subtract? We're going to subtract our costs of acquisition, which is 150 million naira, but it's not 150 million naira. Our real cost of acquisition is 220 million naira. Because I've already said it, that I decided to pick this question because I see it has some complexities. That's why I decided to solve this question. Your real cost of acquisition is not 150 million naira. Every other cost you incurred alongside buying an asset is part of the cost. So my real cost of acquisition is 150 million plus 70 million naira. He said he bought the asset 150 million, but improvement fee 70 million naira. So the cost of the asset is 220 million naira. So I'll come here and say less cost of acquisition, which is 220 million naira. Then if I less cost of acquisition, so 385 million, 220 million from 385, so 385 million minus 220 million, I'm going to get 165 million. 165 million as my rollover relief. So 165 million, subtract it from your 230 million. 230 minus, I'm going to be having a chargeable gain of 65 million naira. 65 million naira. So this is my chargeable gains. Then now I'll now see my capital gain tax. Capital gain tax at 10% of 6,500,000 of 65 million. That will be 6,500,000. So you can see that calculating your rollover relief, your net sales proceed is what you need. Your net sales proceed shows the real value or the amount you generate from selling off the asset. Your net sales proceed and the amount reinvested. I've already said it that the amount reinvested we have already been given, plus the cost at which you buy an asset. That's why I made mention of this in my first class, that anytime you are buying a new asset, any cost you incur in buying, like cost of transportation, cost of this, all those costs are part of the cost of the assets. If you are spending money to improve the value of an asset, you are spending money on an asset that a machine can only produce 10,000, but you spent money so that it can produce 20,000. That money you spent, improvement fee, is part of the cost. So that is just, they just decided to test our ideology on whether we will classify these two as the cost or not, and that is just it. So if you don't understand anything, please take your time to take it back and watch it again. And you don't want to miss our next class, because in our next class we'll start with introducing company income tax and all of that. That is all. Please like this video, share to your friends so that we see in our next video class. Thank you.